Let's talk about the strategic rationale for doing the deal, but also given all of the changes even over the last 3 years, how that rationale may or may not have changed.
Sure. So if you look at it, what we're creating is a leading multi-platform global content company. And it really has almost unmatched scale on the content side, 140,000 television episodes in the library, 3,600 films, very substantial production capabilities, feeding our own platforms, feeding third parties. We are leaders in markets all around the world, certainly in the U.S. here with the CW and CBS and obviously the Viacom pay networks, in places like the UK, where we have Cornerstone and Channel 5, Argentina, Australia, India, and then branded network distribution all around the world. And we also have a very compelling play in D2C, not something that people have talked about a lot, but CBS clearly embarked early on a subscription strategy. CBS All Access, Showtime OTT, Viacom, on the other hand, chose to enter in the free space. Pluto TV, the largest free television streaming service in the U.S. You unite those two together, and you really have a D2C ecosystem, very compelling, both with substantial millions of users, good, strong growth. So on the product side, the asset side, a lot going on. And then financially, a real powerhouse company.
You just said the word unmatched scale. I think there's some who would take issue with that. You look at a Disney. It has a market cap of $245 billion, for example. Netflix value of $136 billion. I think the larger question, actually, in terms of scale, is this going to be enough? And 2 or 3 years from now, we're going to see you either want to go on a continue to make acquisitions to compete at that level, or whether you'd ultimately have to sell the company, given this scale question, because we have these big giants.
Well, let's unpack scale. Like, where do you see value in scale? Clearly, you see value in scale in terms of margins and being able to amortize things like SG&A and corporate cost. No question we have scale, and bringing these two companies together gets us more scale there. We've talked about $500 million in synergies on the cost side as an example. You look at content, we clearly have scale in content between the studios that we operate, Paramount Television, CBS Television Studios, Paramount Pictures, Nickelodeon Animation, Viacom International Studios. Again, a library of 140,000 television episodes, 3,600 films. We have 750 series ordered to or in production. There is true content scale here. And then you go and you look at dealing with partners on the B2B side, distributors and advertisers. We have the #1 television position in the United States by audience, and that's general audiences like 25 to 54s, 18 to 49s, and specialized audiences like kids, African Americans, Hispanics, et cetera. So we clearly have relevant scale for advertisers and for distributors. And so there's no question we have scale here. There's no question the companies are stronger together than they were independently. And we're going to start executing with that.